Welcome back, ladies and gents. It's about that time of day again, folks. 7:30 a.m. Eastern Time, Monday through Friday. My name is Joseph James. I'm here with my partner in crime, Marty Yerrico from TradersAudio.com. Marty runs a live broadcast Monday through Friday at 8:50 a.m. Eastern Time, of course. Check him out at TradersAudio.com for a live broadcast directly from the NYMEX exchange. I, of course, run a live trade room over at SchoolOfTrade.com every morning at 8 a.m. Eastern Time. We kickstart our morning with a morning prep every morning. We offer a free trial on our website. Check it out, and we look forward to seeing you. Now, together, Marty and I are going to provide you with our crude oil morning prep. This is a very unique way to begin your day because we go from the screen here in Los Angeles all the way across the country to the floor, right, the NYMEX trading floor in New York City. I think this is the most powerful way to begin your day. I wouldn't start my day without it. First of all, today, I'm going to begin with charts. My job this morning is to provide you with a technical approach, and this technical approach means I'm looking at charts. Now, we're going to talk a little bit of fundamentals here this morning. We're going to talk a little bit of fundamentals. I'm going to touch on it. Marty will probably talk about it the majority of the time this morning, talking about fundamentals coming out of different countries in the Middle East right now. So we'll talk about fundamentals a little bit, but I'm going to focus on technicals because technicals, in my opinion, well, they're the best way to trade with low risk and high reward, right? I can use fundamentals to guess direction and just try to get in whenever I get in and hope for the best. But with technical analysis, I can pinpoint with precision my entries, my exits, so I can navigate through some very choppy and volatile markets we see these days. So my technical approach this morning is going to be a top-down approach. What that means is I'm going to start with a slower time frame, look at what happened over the last few months, and then I'll zoom all the way in and we'll ratchet down to a faster time frame, and I'm looking at what happened over the past few hours, right? What's happened over the past 4, 5, 6 hours. So we'll look at what's happened the past few weeks, the past few months, the past few days, and the past few hours. And with that, we'll be able to anticipate direction at the open. If I can anticipate direction at the open, it's usually relatively easy. Then I can find those high percentage trading opportunities in that direction. It's not rocket science, right? It's day trading. We're looking for trades as early as 8 a.m. Eastern Time in our live trade room. And of course, again, find the direction, trade in that direction. And looking at the chart this morning, I don't think it's going to be too difficult to find direction here today, but we'll do our best here once we get started. Once I'm done here with my charts, I'm going to toss it all the way from Los Angeles to New York City. I've got my good friend, partner in crime, and fellow School of Trade grad, Marty Yerrico, with me here today. He's over at TradersAudio.com, and he's got a great analysis ready for us today on market direction, intermarket divergence. Now, guys, what I learned from Marty about intermarket divergence, we used that yesterday afternoon to make money when crude turned. Right? Remember when crude turned yesterday afternoon from moving lower to moving higher? We noticed the spread widening in the Brent crude contract in the trade room, and that was a big clue for us. Make sure you listen in to what Marty's talking about when it comes to intermarket divergence. Market internals, option prices, and we'll also talk about those very important pit session trading levels. What are the floor traders actually watching out there? Because remember, there's a big difference between the electronic trading hours and the regular trading hours. Okay, so stick around for news directly from the trading floor. Now, you've heard enough out of me here for now. Now that you know the layout of the morning session this morning, let's double check and make sure we have all the news under control today. And let's go through what our typical morning prep looks like every morning. Every morning we come in with our members at School of Trade. We open up our morning prep. We open up the live trade room. And we begin with a very formal morning prep. We always begin talking about the news, and let's begin first with looking at today's news. Now, I'm going to talk about Syria in just a couple seconds, but let's think about this first. What day of the week, what week of the month, what month of the year? First of all, what day of the week do we have here? Today's a Tuesday. What week of the month? The 5th week of the month. What month of the year? This is the month of August. What does that tell me, guys? That tells me, well, first of all, the month of August is notorious for being lower volume. Okay, you are going to see times this week of good volume and bad volume. You are going to see times when the volume moves very, very well, and there will be times when it almost looks like your charts are stuck, right, or somebody hit the pause button in the price action. So be aware the month of August, especially the last 2 weeks of August, which we are in those right now, last 2 weeks of August, we know most traders are going to be half on vacation. Even if they're at their desks, they'll probably be on a mental vacation. But we know that the month of August is going to be inconsistent, right? It's as we say, it'll be consistently inconsistent. The volume will be in the month of August. So you have to be aware of that. We'll be prepared for that. We'll be watching the market personality throughout the morning today. The 5th week of the month. Now, we don't oftentimes see this, but we have 1, 2, 3, 4, that's right, 5 Fridays in 1 month. It's a very unique situation. The month of August is one of those months that oftentimes has it. And so we have the last week of the month now being the 5th week of the month. This is, of course, a little bit different than we're used to seeing. We're used to seeing the 4th week of the month be the last week of the month. Bottom line is we know this is the last week of the month, and we know that whenever we have the last week of the month, again, we do have a little bit of concerns of volume because it's the last week of August, but typically the last week of the month results in some volatility. In my opinion, there are people that participate in crude oil, natural gas, and other markets at the beginning and the end of the month that just wouldn't be there during the middle of the month, right? So the first and last week of the month, we always expect to see some pretty good volatility. You talk about crude oil, and all of a sudden you think about all the companies that are hedging, right? Suppliers, consumers of crude oil, right? Consumers of crude oil, gas stations, shipping companies, right? Any small business out there. People are going to be hedging against rising crude oil prices at the end of the month. So, as you can imagine, you're going to be seeing some volatility coming towards the end of the month. Now, at the end of the month in August, it might be a little bit balanced with lower volume, right, with the month of August. So, we are taking this with a grain of salt, as they say. And of course, we know that today is a Tuesday. It's a Tuesday, right? Yeah, Tuesday. So we know Tuesdays, it's not Friday, it's not Monday, it's not the beginning or the end of the week. It's not a Wednesday because, Wednesday would be inventory day. It's not a Thursday. Thursday would be jobless claims. So, Tuesday's that middle of the road. We don't really have anything that stands out for us. If it was a Friday, I would have a plan. If it was a Monday, I'd have a plan. If it was a Wednesday, I definitely have a plan, right? Tuesday, our plan is to keep our eyes and ears open so we know when the market personality is fast and quick. In other words, when we're seeing good volume enter the market, that's when we want to be trading today. So the last week of the month of August, beware of that consistently inconsistent volume. And now looking at the specific news today on Tuesday, August 27th, we'll zoom on in here. We are past now John Williams speaking, one of our Fed speakers. We have news at 9 o'clock, 10 o'clock today. You can see both of these they're important news events, but they're definitely not going to be the Red Star news that we got yesterday and that we'll get on Thursday. So today we have a little bit of an easy day here. We've got the Case-Shiller Home Price Index at 9 o'clock and the Consumer Confidence at 10 o'clock. Now the Home Price Index is definitely important, but it's going to take a backseat to the Consumer Confidence number. Home prices have definitely been on our radar the past few months because the housing market has been seeing a little bit of a rise in interest, right? There's definitely been some bullish news coming out of the housing industry the last few months. So we're curious to see if the home price index will continue to move higher. But really, I think most eyes and ears will be focused on this consumer confidence number. The consumer confidence number, we got to remember, everybody's thinking about Fed tapering. And right now, there are some pretty big concerns that this number is going to come out pretty soft. If you go over to the Sideways Markets blog, I posted yesterday afternoon when I was doing my morning prep a video review of today's news straight from Econo Day. I thought it was a great overview of what is really going on in the minds of economists, traders, and consumers right now that I think is going to affect this 10 o'clock news today. So they're expecting a little bit of a soft number here today out of consumer confidence. And that's not going to do well with that Fed tapering concern. So this is all going to be rolling together here with that tapering issue. And we still have to remember we got one other piece of news that is affecting us this morning, and that's coming out of Syria. Now, I'm going to talk a little bit about this right now, but for the majority of what we're looking at, technicals will take the front row on this. Bottom line is I've got news at 9 o'clock and 10 o'clock today. I'm going to set my alarm for that to make sure that I'm aware of that 15 minutes before, and I'll skip 5 minutes after that news event before I go taking any trades afterwards. So be aware of that. Now, if you head back over to the Crude Squawk blog, again, you can get a link on that on sidewaysmarkets.com. If you go to sidewaysmarkets.com, you'll see a link there for the Crude Squawk and Prep. Head on over. They'll take you to our Crude Squawk blog. And I put some information here about the civil war in Syria. Now, the reality is what's happening in Syria is a big deal. It really is. We have a civil war going on in Syria right now, and basically the leaders of the war are using chemical weapons against civilians. Now, this is when other nations start to step in and stand up for these civilians, right? If nobody else will take care of them, well, then we, of course, as a world, well, whether you agree with it or not, we believe that we should go in and help people who are very innocent bystanders and should not be treated this way. And so yesterday afternoon, we heard from various political speakers, one of which being our Senator Kerry. And Senator Kerry made some very strong remarks that mentioned basically a military presence or a possible military strike on Syria. Now, that's where this becomes a problem. The Syrian war doesn't affect us very much because Syria is not a very big oil-producing country. It's not. In the big scheme of things, Syria is not a high-producing oil country. But the reality is, if we go into the Middle East and we bring with us weapons of mass destruction and war, that is going to affect the concerns about supply, the reality about supply, right? So remember, the fact of the matter is the markets that we trade are all based on the perception of supply. If here in the U.S., if in Europe, if in the rest of the world, we're concerned about supply because these countries are going into Syria with the idea of fighting for these people, then that really has concerns over the supply of crude, right? Because a lot of that oil is coming out of the Middle East. So with that said, that's what's going on. It's not the war in Syria. It's us going into Syria and, of course, stirring things up. Believe me, I know that many of us, if you polled 100 people on this topic of whether you should be going into that place, I'm sure there'd be 50% on one side and 50 on the other side. But the reality is what we heard yesterday is what's causing this jump this morning on crude oil futures and many other markets today. So here we are. We've got price now cooking up to 108 even here on crude this morning. It is very, very easy to see that this ever since yesterday afternoon. Now remember, yesterday morning, we were short this whole thing, right? We were short yesterday morning, the whole thing. I mean, we nailed it. We got some great money out of the market yesterday morning on crude. But just before we finished up our morning session, all of a sudden, we start to notice that the Brent crude is taking off. And of course, I'm going to talk about this a little bit later. We'll hear from Marty in just a few moments. He'll talk about the intermarket divergences that we see between crude, RBOB gasoline, heating oil, and Brent crude. But it was almost as if we saw it coming. And then sure enough, we start hearing our news feeds just explode with news coming in over the loudspeakers. And we are well aware of what's going on now. The technicals told us exactly what was soon to be released over the loudspeakers. It was an incredible example of how we use the intermarket divergence, and it was an incredible example of how we were able to protect ourselves by knowing what to look for in the market, right? So we'll let Marty talk more about the divergence that we saw yesterday afternoon that really gave all the technical traders out there really a heads up. We didn't even need to look at the news. We knew something was wrong. We didn't know what was wrong, and we were able to trade around it. It was a great scenario yesterday afternoon. This morning, the big question is not what direction we're going in. Does anybody have any idea what direction we're going in? Well, I don't need any glasses or a rocket scientist degree to see this one. We're going higher. The big question on my mind this morning is, where are we going? Well, I have resistance, as you can see here, at the top of this channel, at the 107.95, the 108.63, but I've got a nice little hidden target up here at 109.55. Guys, if this thing continues, and it definitely may. Now, think about what's happening right now. We have the last bit of the summer. Everybody's distracted by camping trips and being on the lake and, traveling with their family before they go back to school. This just reeks of that end of the year, political back and forth when nobody's paying attention. This just reeks of that right now. Remember how every December they talk about the fiscal cliff, right? I know. I didn't mean to bring that up again. And I know it makes me sick to my stomach just thinking about all the stupid people on CNBC talking about the fiscal cliff, right? Well, the 45 days between Thanksgiving and New Year's, we hear about fiscal cliff because they got nothing else to talk about. And sure enough, right, the news media makes everybody worried about this non-issue. I have a funny feeling that may be the case again here right now. Can't you? We got Labor Day here in a few days. We got a long weekend coming up next weekend. We got the last few weeks of the summer. Everybody's distracted. Oh, I could easily see this news media just taking this for a ride. So with that said, again, the idea here is that eventually this thing has to stop today. It has to. It can't go on forever. Eventually somebody's going to think the value is not there anymore and price will now collapse. When that happens, I'm going to be ready for that to happen. But boy, your guess right now is as good as mine. And this is when we've got to really be careful. When we have things outside of our control that do not look normal, this is not normal price action, we must be aware that our emotions are going to tell us, oh, trade big, you know what size we're going, you know what direction we're going all the way to 110, right? It's easy to get wrapped up in the emotions right now. But I'm going to tell everybody this morning in our trade room to be very, very careful right now because clearly this is something that is out of the ordinary. It's something that we don't see very often, and this cannot last forever. With that said, I've got resistance overhead. I will be buying pullbacks now up to that resistance. Again, a target being 109.55. Now, I don't think we're going to get there today, but boy, who knows? Who knows? The way this market looks right now, anything could happen today. With that said, I will be drooling over the stall out at the highs and the short back down. Now, when you look at this a little bit closer, These charts are already posted for you guys in the blog, so you guys have them already. But if you look a little bit closer here, you can see we really began running here right at 3 o'clock this morning. So this market has been moving ever since the opening bell in Europe at 3 a.m. Eastern time this morning. So we got this big run up. This did not just happen in the past few minutes. This has been happening since 3 a.m. So this is going on 5-6 hours of trending higher here. Eventually, these buyers are going to get tired. Again, the big question, though, is will they get tired at 109 and then collapse, or will they get tired here at 108 and collapse? Now, I'm going to be tempted to try to jump into a few of these shorts, but I'm going to sit back and relax a little bit this morning. I think this is a scenario that really is going to be explosive. I'm going to wait to listen to hear what Marty has to say because he's on the floor of the pit this morning, and I want to hear what he has to say about this. But the reality is guys like me are going to be looking to short this baby, right? But I have a funny feeling there's a lot more gas in the tank, no pun intended, that we're seeing right now. I hope I'm wrong. I hope this thing collapses and we get that easy short, bringing it right back into this range. By the way, these numbers all need to be revised higher because it's been impossible to keep a lid on this thing here. So just be aware here, guys. These numbers will need to be adjusted higher. All of these, I'll adjust them when Marty takes the microphone, and I'll repost them on the blog for you guys. So again, I'm looking for a short right now, but I am really, really trying to be cautious right now because, again, we just don't know how far this bad boy wants to push. And I've got that 109.50 area overhead, 109.55, that I will be using as a final runner target. So keep an eye on that 107.95, 108.63, 109.55 as we go higher. I also have a 107.95 as well up top here. You can see we're above the previous week's high. I mean, none of this is a surprise. You don't need me this morning to tell you that we're going higher, right? Just open a newspaper right now and you'll know we're going higher. So this is not the difficulty. The difficulty is not choosing direction. The difficulty right now is choosing. Am I buying pullbacks as I go higher here? Or am I waiting for that failure and then the whoop and sell it right back down in? That's going to take a little bit of time here to tell. The easy trade right now is to hit the buy button. But if you hit the buy button right now, where's your stop loss? Exactly. We don't know. We don't have a stop. We don't know how far back this can pull back before it keeps going again. So again, I'm going to be very calculated getting into these trades going higher this morning. Members, I'm getting in at my trigger zone every step of the way. So be aware we're using wave patterns to get long. But again, if we start seeing those wave patterns fail this morning, that's when we know. Sit on those hands going higher, wait for the price to collapse and go lower, and then take it down late in the day today, we should see a pullback here. We should see some profit taking. The goal will be not to get knocked out of this trading session too early before we can take that profit right on the short. Now, I've been talking about Syria. I've been talking about intermarket divergence. I've been talking about listening to hear what Marty's seeing on the floor. Without any further delay, Marty, how are we doing this morning? Great to have you back. Did you get bronzed out there? Did you enjoy your vacation? I hope you did, my friend. Good to have you back. Hope you're rested and relaxed. And boy, what a great day to come back, huh? You've got all this action happening in Syria. What are you seeing on the floor? What do you got for us today, Marty? Thanks for being here.
No problem. Rested, relaxed, refreshed. We're ready to go for another run, as we'd like to say here at Traders Audio. Okay, so besides, no secret to the geopolitical news that's happening overseas, right? So we have a lot of geopolitical news in Syria. A good way that I've been actually keeping my eye on the news feed is I have somebody on the ground there in Syria. You can follow him on Twitter at Richard Angle, right? At Richard Angle. He has his feet on the ground in Syria, sitting there and giving us updates on his Twitter feed. So again, I've been keeping an eye, getting developing situations from Richard, again, at Richard Angle. Okay, so into the close yesterday, yes, the multiple market divergence was quite significant. We did see some downside activity into the closing bell yesterday. Again, as you can see on the pit traded chart right here, again, a little bit of selling came in below the daily pivot, balancing us out around the 105.80 level, right? So we saw that selling first in the RBOB and the heating oil, and then we saw it follow suit with the Brent WTI spread widening out to $5. Well, that's long gone, and after John Kerry, Secretary of State John Kerry, took the microphone at around 2:45, 3 o'clock, from 3 to 3:05, I would say he was on the microphone, and after that, markets started rising across the board. Now, just looking really quickly into the crude before we take a look at all of our other usual suspects, you can see crude broke out of its channel wedge here, and now we're starting to trade higher. Now, of course, we have the 108 even, which we just kind of pulled back to, and then we have the 108.51, right? 108.51, next level of resistance up above. Could be possibly selling this 108.51, again, selling the resistance above the channel, above the wedge. That's going to be our highest percentage trade, again, selling the channel. Selling the resistance above the wedge and channel here, right? We have 108.51. We also have 109.55. We have 108.62 as well. So 108.51, 108.62, and 109.55, as JJ was mentioning, all levels of resistance above. Now, if we get a closing settlement above this 108.50 or 108.62 today, again, if we get a close and settlement number above 108.51 or 108.62, we're going to be looking bullish up to 110, no doubt about it. But again, we are going to try to come in and sell some of this to just buy a pullback. So, even if we do make it up to this 108.51, 108.62, right, we can just kind of pull back just a bit and then continue to buy again, so we can pull back and continue to buy this. But again, look for just some resistance as we kind of come in this morning. So again, no secret about the geopolitical news. Again, across the board, we're watching this reaction here and all of our multiple market divergence across the board here. Again, we do have, as I mentioned now, this is the whole reason why I've been telling you guys the locals have been holding somewhat of a net long position, and they've been hedging in the options because of this right here, geopolitical fears. It can rear its ugly head at any time. Look, it reared its ugly head at 3 a.m. this morning or 3 p.m. yesterday after John Kerry got off the microphone, Secretary of State John Kerry, and the market rose. So that's why locals always have a little bit of a net long position in their back pocket in the options or in the outright. So that's what we've been seeing, larger locals buying them. Paper has been kind of two-sided, selling them, so it gives a great opportunity for the locals to buy them. Now here on, what's today's date? The 27th of August, you can see that we have our markets all looking bullish this morning. Again, your crude right now up at 108, just about sitting at about the 108 level, right? 108.010, right? We're up about $2.15 today, still higher, but again, looking to sell that resistance just a bit. Obviously, you can see your RBOB and heating oil are trading higher right now. RBOB has been and continued to be on the bid. We're higher by about 3 1/4 penny today at about 2.89 even. And then your heating oil is trading at about 312.62. And again, these two markets are pushing the market higher as we've been watching crude kind of follow suit with the RBOB and the heating oil. Brent crude as well has been trading higher at about 112.5 or 112.5 right now, trading extremely higher due to geopolitical news. Now, Brent WTI spread back now down to 437. Now, yesterday before the close, when we were selling actually into the close, the Brent WTI spread was at $5 even. So look at that price come in, right? Almost 70 cents. That's in contango now by almost 70 cents. 60 cents, 70 cents at 425 right now, the Brent WTI spread is. So that's very bullish. Very bullish, and now that even gives me actually hope that look at this. We're making new highs right now. Look how this is now at 418. The spread. It's coming in significantly, and we're rising here. The spread is coming in so significantly right now. We're almost in a full dollar in contingency right now. So this is huge. We're in contango in a big way, and you can see we're rising up to that 108.5 because of that spread coming in. So this is huge right now. I'm watching the spread just come in right in front of me. So we're about 415 now on the spread. Calendar spreads have also been leading the way higher. Look at the calendar spreads. They both have positive readings here. OCK Novi right now. The OCK Novi 71 cents. OCK Dees about 208. Novi Dees is about 430. So look at the big push up in these calendar spreads, the crack spreads again, everything higher here. As you can see, we had a OCK-Jan looking a little bearish, but every other one looks bullish. Right now, this morning, you can see actually your dollar is actually higher on the day, not lower. I had that a little backwards, but again, we've been looking at your dollar, ladies and gentlemen, and a little bit of a risk-on sentiment, right? We saw a little bit of selling in the dollar yesterday as they came off those highs of 81.52 even, right? So that's what I mean by a little bit of a lower dollar. Again, it's lower off of those highs that we had from yesterday. Now we're sitting up right at that high 81.52 on the dollar. So if we break above this 81.52, which is one tick right now where we're at, if we break up above on this dollar, that's where the risk-off sentiment will kind of inverse. But again, right now we have somewhat of a higher dollar, but I'm using that 81.52 as our break even today. So imagine that as the opening bell price. That's what I'm going off of, and that's what I think is correct to go off of, to use it for a risk-on, risk-off sentiment. We're also watching them sell equities and come in and buy gold and crude, watching them come in and sell dollars and buy gold and crude. So that's a risk-on sentiment as they spread out the money throughout the market, right? Really quickly, just looking over into the natural gas, I just want to show you guys natty gas. October front month now, guys. Again, we have expiration of options today and expirations of outrights tomorrow. So a lot of volatility is going to be coming in the natural gas now as we're going to be expiring the SEP options and expiring in the SEP outright contract today and tomorrow. Options today, and we're going to be looking at, again, outrights tomorrow. You can see we're at the bottom of this bullish channel here. We've been trading within this bullish channel here, which I just took from the SEP contract and now brought it over to the October contract. Major levels that we're watching, we were watching this 355.60. If we can get above this 355.60, we're bullish. And I think that we can trade up the potential. Let's see, 360 in the higher end of this channel. Again, but right now it looks like we're going to try to buy these lows at 350. Right, and try to get up to these 355.60. If we can close and settle above 355.60, oh boy, we're bullish. If not, then we're selling the hell out of this market. So right now, 350 tells all. If we open up above 350, we'll be buying. If we open below 350, we'll be selling. Most likely, common sense tells us we're trying to buy this slow, this channel, right? And as we kind of trade higher, we're going to watch that 355.60, very important level here. And if we do get above that, then we can continue to stay bullish, right? That's in your, again, October natural gas. Levels for you this morning now, as you can see here, ladies and gentlemen. I got a couple pit session levels for you. Why is that chart showing up on there? It's so weird. There we go. Levels here for you this morning. I got crude October pit session level from yesterday. 106.51 was the high. The low is at 106.56. Sorry, 105.56. The high was at 106.51. Right, the low at 105.56. Closing settlement number was at 105.80 yesterday in the pit session here. That was your settlement number for pit session. And the daily pivot's 105.96. Sorry, that's 105.96. Backwards this morning. You can see higher markets across the board as we just tested the 108.5 and just bounced off it again. That could have been the trade right there. Again, selling the high off the 108.5 right there. Again, we just bounced off that level right here to the tick that we just called. And now we're watching a little bit of a pullback off this high, as we just mentioned, and you can continue to buy the pullbacks again. So we were going to look for the relief, look at the selling. Now we're down about 20, 30 points now, just coming off that 108 half level. So it's a decent call so far. It happened very quickly too. Is you get these less players in the market, less participation you get this higher volatility in this time of trade. Alrighty, guys, real quick, let's get to the levels. Some resistance above 106.31, 106.96, and 108.02. I got the 108.5. I got 108.62, and I got 109.55 as resistance up above. Support down below, you got 105.41, 104.28, 104.96, and 103.96, right? Open interest this morning, 326,890, and that's just kind of sitting steady here. So open interest on the rise here, getting a little bit of participation here. But again, mainly right now, what we've seen, remember, open interest was in the high 380s last week, so we've seen a little bit of a fade off that, kind of squeezing out some shorts. So open interest telling us that some shorts are squeezed out. Again, there's a lot of activity in that 108.5 and 110 call, so they are targeting the upside. Yesterday in the pit, all we saw was very thin, light trading. We only saw 400, 105, 107 calls trade, and then we saw about 300, 104 puts trade. So very light. We're talking hundreds of contracts here in the pit, so that's disgustingly light. But they do target 110, as we've been talking about, in the 112 call for God knows how long now, if you look back at the previous worksheets. Looking now into your natural gas, you can see, guys, natty gas pit session high, 358.10 was yesterday's high. The low in the pit session on the October contract, that is. I'm looking at October levels instead of the SEP contract. I'm just going to do OC. All right, 351.40. Cold and settlement number 355.5. 354.80 is our daily pivot today, which you can see we're actually just trading kind of below that right now at the moment. Coming into our first level of resistance, that's why we're trying to buy the low of this channel, because our resistance is right here, 351.50. We're only 10 ticks away from that. Right now we're 350.5. So 351.5, 348.10, and 341.40 is going to be our levels of support that we're going to try to buy today. Resistance up above, I got the 358.10, 358.20, 361.5, and 368.20. Now pay more attention to the September levels that we were keeping in mind on, the September levels that we've been watching for the last couple days, right, from yesterday that we were watching. So kind of watch those September levels, even though that we're trading into the October contract. It's the roll transition. They do a late roll. Goldman does a late roll in this contract here, especially for natural gas, as we're expiring today in the SEP and, as I mentioned, in the SEP options and in the SEP outright. So options and outrights expire today. Open interest 217,500 even. So we're watching just a little bit of short squeeze come in. I'm saying we can buy these lows very simply. As you can see, implied volatility sits at about 33% and 32.80. So that's about it, guys, here on the trading floor. I got to wrap this one on up and get going here, guys. So again, I'd like to thank you guys for joining us here. I'm going to throw it back over now to Joseph James. We have a very interesting day here today, kind of panning out as now we got that little bit of a resistance at the 108.5 level, and now we're going to try to come in and buy that pullback here as we're looking for higher direction to the upside. Again, locals here are net long so far, as we've been speaking about. With now, again, let's see if we get that paper presence this morning come in. If we have paper start to come in and buy, this would be very interesting. So we're going to be watching for that institutional paper interest coming in.
Boy, Marty, as always, great to hear from you today. Great to have you back. Always a pleasure. Marty Errico, guys, check him out every morning at 8:50 a.m. Eastern Time. He has a great broadcast. Him and his partner, Jeffrey, do a great job over at TradersAudio.com. 8:50 a.m. Eastern Time. Check him out. Today will definitely be one of those mornings you'll want to be listening in to what they're saying and hearing and seeing on the trading floor. And then, of course, come out and see me. I'm JJ at School of Trade. Come out and see us every morning at 8 a.m. Eastern Time for our live trade room. We look forward to welcoming you guys in as new students. Don't forget, we also offer a free trial on our website. Email me directly. Email Marty directly. I'm Marty. No, that was Marty at Traders Audio. I'm JJ at School of Trade. And as always, thank you so much for being here today, guys. Steve, that was let me get that over to Marty here. So what was Marty, what was that handle again? What was that Twitter handle again? Remember what that Twitter handle was you mentioned earlier? It was it, yeah, Richard something. Richard Handle, Richard Angle, Richard Ankle? Yeah, I think it was. I think it was Richard Ankle. I think is what he said it was. Try that one. At Richard Ankle, as in ankle. Yeah. Angle. There you go. Give it a try. All right, guys. Thank you so much for being here today. As always, a great kickstart to our morning session. We've got a lot of excitement in front of us today. We've got news at 9 o'clock, at 10 o'clock. And again, all eyes and ears appear to be on that issue developing in Syria. Have a wonderful day out there. Enjoy the last full week of the month of August. Boy, the summertime is almost out of here, and we'll see you guys here in 23 hours and 30 minutes for a Wednesday, a hump day edition of our morning prep. The screen to the floor from the entire team here in Los Angeles and the entire team in New York City from Traders Audio. Thank you guys for being here. We'll catch you guys tomorrow. Adios, amigos. Bye-bye for now.